Hello, real estate investors. Thank you so much for joining me on this amazing day. Today, we're going to finish up our three-part series on financing a deal with lenders. We've covered over local lenders, national lenders, and now we're going to cover conduit lenders. As always, there is a link to the full blog post in the description below. If you would like a written out description of what we're talking about today, or if you would like to follow along in written form or whatever your reasons are, go check out that full blog post below. If you haven't done already, please like, comment, and subscribe. This helps you out. This helps me out. This helps the world out. And thank you so much again for being a part of this journey with me as we learn all kinds of things multifamily real estate investment experience. Okay, today we're going to talk about conduit lenders. Now, conduit lenders are made up of usually people who get money from major backers on Wall Street. So, people will pool together loans together and call in what they call CMBS loans or commercial mortgage-backed securities loans. And these are a pool of mortgages that are pulled together based on risk, return, and maturity dates as well as some other factors. And what they do is they pool these loans together in what we know as tranches, which have different risk factors associated with them. And then these tranches are offered onto secondary markets. So with the more risky loans of, say, higher risk loans with a higher reward, those are be given to the higher risk investors like hedge funds. And then the lower risk tranches are given to people like lower risk investors like pension funds. Now, what's great about conduit lenders is that the requirements are a little bit more relaxed than traditional lending. So they don't require as high of a good credit on the loans, and then for that you get a loan you get a loan when you might not normally be able to get financed a loan. So if you have bad credit or lower credit, conduit lenders might be your saving grace. Their interest rates tend to be competitive, even though they are a little bit higher than national lenders. So be aware of that because that's an important factor to know. And also to keep in mind that the current loan terms are about 10-year fixed rate, a 10-year fixed rate loan, even though sometimes they go anywhere from 15 years down to 7 years, and then they're usually fully amortized across 30 years. It's just the loan term is about 10 years. So that's something to keep in mind as well. So these are also these loans are non-recourse loans, traditionally speaking, and the only thing that can be consideration about these loans is that there's the deficits or a yield maintenance, which means that deficits means that if you need to get out of your loan earlier, that you need to buy an equivalent amount of treasury bonds or stocks or bonds to meet the level of income that was the loan was providing in replacement. And then a yield maintenance is just a percentage of a loan that is required and due it on prepayment is due upon prepayment. Just a percentage of the loan in order to prepay the loan. So those are some things to keep in mind because deficits and yield maintenance are two things that will knock you on a repayment penalty. So you just want to make sure you keep an eye on that when you're looking at the loan. But other than that, if you want loans that are better credit rate for lesser credit rating individuals, still competitive rates, selling to the big boys because of the highly commercial ability of these CMBS loans from the conduit lenders. You're able to refinance really easily, and all things have it. So there we go. It's conduit lenders for you. If you want to learn more about it, check out the blog post as already mentioned before earlier in this video, and you can feel free to do your own research as well. All right, thank you so much for taking a look at this video. Happy apartment hunting. Your fellow multifamily real estate investment expert, Connor Scott McCraw, out.